Happy Thursday, everyone. This is Scott Welsh, and every Thursday we get together to talk about ways to beat the market. Now, I have never recorded at this time of day before, so I don't know if I'll be lucid or I'll be absolutely an idiot. I don't know which, so let me know. And also using brand new computer slash recording equipment. So if it's better or worse, you can let me know that too. But we're going to talk about today the vaunted death cross, which was actually in the news just a few days ago. I kid you not. We're going to find out if people who are talking about that are crazy or if this is something maybe we need to pay attention to. Now, three things today. First of all, we're going to talk about the Golden Cross. And if you get my weekly newsletter on Wednesdays, then you know what that is, but we'll talk about it. But if the Golden Cross still works, I guess that's a spoiler alert. I'm going to let you know. Then the death cross is the opposite. You with me now? Logically, the death cross should also work, right? I mean, that's why we're doing a video about it. But does it really work? And if it does, then great. And if it doesn't, what can be done to maybe make the death cross a viable thing? Okay, first though, as always, since I don't have my recording studio yet, I like to give you a picture of me. This is just me hanging out in my t-shirt and my black watch. I'm just feeling kind of casual, and a friend took the picture. So if you're wondering what I look like, that is me. All right, so hopefully that helps. Now, let's talk about the death cross, but let's preempt that with the golden cross. And what's the golden cross again? I mean, if you've been in trading, you've probably heard it. The Golden Cross is quote unquote pretty famous. You actually do hear it on CNBC. I've actually heard it with my own ears on Mad Money. It is referenced a lot in literature, online, Investopedia. The Golden Cross is a real thing that people talk about. And what it is, it's really simple. It's just when the 50-day, and it's almost always talked about in a daily chart, the 50-day simple moving average, SMA, crosses up over the 200-day period, SMA, simple moving average. So waiting for the 50 to cross up and close over the 200. That means that the short-term momentum is now rising faster than the long-term momentum. Something is underway, and we should then be a buyer. Now, thinking about this, short-term momentum greater than long-term momentum, it is a momentum play, right? And if it's momentum, what is that really? Take a few guesses. Trend following. If you're following momentum, you're following the trend, and then it's trend following. And how many times have you and I talked about trend following? We know that trend following works. And by work, we mean it produces profit. So if we believe the research on hundreds of years of trend following is valid, then the Golden Cross GC should work. Just makes sense. That should be a viable trend following strategy. And it does work. And that's what was in the newsletter that comes out on Wednesdays. Go to my website to get involved in that list. Okay. It does work. It does produce profit. Sometimes it produces substantial profit. But on the whole, it's kind of the same as just buying and holding the market. It's not really better. It's clearly not worse. And in some cases, it's better. If you look at individual stocks or individual instruments, you'll see that one where the Golden Cross worked better than buy and hold, and then somewhere actually underachieved or underperformed buy and hold. It's very, very similar. The data I've seen probably says that it's a little bit better than just buying and holding, but it's just about the same. Okay. Now that gets us though, if they produce the same amount of profit, let's just say, and we're back to the trading versus buy and hold argument. People say, well, if you just buy and hold, then just why trade at all? Good point. I don't know why I had to say it that way, Timmy, but good point. There is something about trading that is way more valuable. I'm in a trade, I'm out of trade, I have rules. It is active. We are empowered as human beings when we are active, when we take action. If we're passive, we're depressed, we're insecure, we're not confident. We take action, that reverses. We're confident. And Buying a golden cross makes us take action, and that is far better than buying and holding passively scared. So you can make the argument the same amount of profit with the same amount that trading is actually better than buying and holding. Well, with trading, you can compound gains. Great. With buy and hold, you don't have the capital gains tax. Ooh, right? Back and forth. It's going to be hard for you or anyone to convince me that if profits are similar, that trading's not better, right? I will almost always think that trading is better. And there are modifications possible. The golden cross we're talking about is in its purest, most untouched form. You buy when the 50 crosses and you sell when the moving average crosses back down. What if we took a profit target? What if we had a break even? What if we had a time exit? There are a lot of ways to make that entry maybe even more profitable. And so I say to you that the golden cross might even be better than we talked about yesterday in the newsletter. And it's worth your investigation. Okay. Oh, hey, look at that. There's a little picture. The golden cross at work. And I know it's small. I'm sorry. But this is the 50 simple moving average. That's the 200. The simple, 50 simple, crossed above, and boom, you're in. Of course, the robot took this trade. I built an easy little robot for this one. And then you would get in, and look, this is Apple, so we know it moves. Looky, looky, looky. You don't even think about getting out until this average crosses and closes below, and that is right on this bar, and that is a huge win. Could you have bought and held it? Maybe, but how many times would a buy and holder sell there, there, right? There is a mental war where this gives us a very easy rule to get in and get out. Oh, okay, you with me? Got the golden cross? So if the golden cross works, then the death cross is the opposite. When the 50 SMA crosses below, that surely means that momentum is now going down and we should sell. If it's good enough to buy, it's good enough to sell. The death cross should be a system that works that we should use. So, is the death cross just as good? No. And if you're a fan of the Breakfast Club from way back in the 80s, not even close, bud. If you watch the movie, you know what I'm talking about. Otherwise, you think I'm an idiot. It is not even nearly, it's not even remotely as good, all right? So let's play a fun game. Let's put the golden cross / death cross on a couple of stocks and let's see how it goes. So let's transfer over to my brand new TradeStation, which I don't know if I like. And if you know your TradeStation, this is the latest version of TradeStation. And I don't think I'll be using it, but it sure is snazzy, is it not? All right, this is it on our screen. You can see that when the 50 moving average crosses above, we buy, and then we sell over there. That's a trade you saw. And you can see when it closes below, that's a SE short entry, and then it gets out. Oh, you made a little bit. That's actually a winning trade. Okay, there it is. Now you can see it. Crosses below, we're sellers. Crosses above, we're buyers. We're constantly in the market. We're constantly swiveling. We're following the momentum of the market. This should be fantastic. Let's take a look at the performance report. Can you see it? I don't know if you can see that. Let's bring it in, shall we? Oh, look, you can see it. Take a look. You see while I'm shrinking the screen a little bit? You see? Oh, there it is. Net profit. Short trades negative, long trades positive. Super cool. That is not super cool. That is super garbage. All right, well, maybe it was just Apple. Let's do another Dow stock. How about AXP? Because it's in the Dow. AXP, oh, not bad. Long, 79, short, 2,000. Significantly worse. Let's do Boeing, right? Oh, long trades positive, short trades negative. Let's do V. How's it looking? Long trades positive, short trades negative. How about Home Depot? Home Depot is awesome. That's one of my favorite Dow stocks. Long trades awesome, short trades negative. So you can see almost all of them. If you go through all the Dow stocks, if you go through all 30, maybe one or two had any sort of positive return at all. Almost every single one. Like, again, it is 1, 2, 3. Only a few are even remotely positive, and almost all of them are negative on the death cross. And you saw even when there was positive, it was way less. See what I'm saying? Now, why is this? Why is the golden cross, as you saw on all those screens, profitable? And if you saw my post yesterday, obviously 26 of the 30 were nicely profitable. Why are almost all of them negative? And even if they're not negative, they're extremely poor returns. Why is that? Well, let me say it again, and this may make other educators cringe and want to slap me in the face, and I understand. It's nice to have rules that are the same for long and short. I'm just telling you what I've seen. The long side of the market and the short side of the market are not the same, and it is not prudent to think they are. It is a known fact, if you look it up, that the rise in long trades and the rise in short or the fall in short trades are not the same. Stocks go up at a different velocity than they go down. And you have to do your research, but generally speaking, they go down 3 times as fast. All right. Look that up. Make sure I got that number right. But they go at different velocities. That's a fact. There are different traders. Long side traders are usually specialists. Short side traders are usually not the same people at all. At all, right? Read the articles online. You have short seller Johnny, right? And long seller Billy. They're not the same person. Like, you very rarely hear anyone be a short seller and a long trade taker. So these are different traders. Guess what different traders have? Different rules, different everything. So you can't just blindly apply the same rules in the stock market or in any instrument that you look at. You need to make sure, you need to look at it first. And there are different emotions, right? Short sellers are looked at as jerks, trying to ruin companies and ruin the economy. And long side traders are noble. Warren Buffett believes in America, positive, right? Short sellers, negative, angry, pitiful, lonely, right? There is that stigma on different side of trade, on the different side of the market. So why put the same rules on both sides? Does it really make sense? I'll let you make your own final decision for yourself. But I'm here to say, in my opinion, different rules. But it was absolutely worth looking at it, right? If you want to know what trading strategies work, you need to find out what trading strategies don't work. 50 above the 200 golden cross, it seems to be very promising. I'm encouraging me and everyone else, take a look at it. If you're a long-term trader and you want to be a trend follower, this might be something to put in your basket of tricks. But the death cross is not anything even remotely interesting in all of the stocks and charts that I looked at so far. This may change. If it doesn't, I'll tell you. But I did do one quick experiment before I wrap up, and I put a time exit on the death cross because the velocities are the same. I didn't want to just let it work itself out. I put a time exit on it. And when I did, I found way more of the Dow members produced a tiny bit of profit. I mean, literally, we're talking about a couple $100. Not much, not much. But if you add a time exit to a death cross, you can make it better. But not still not anywhere as great. It's promising, though, to take the golden cross, as I've said, and the death cross, and maybe add some more rules to it. But if you don't want to add anything, if you want to just take the famous strategy that's been around, look into the golden cross and get rid of the death cross. Bottom line, I just read an article, as I referenced at the beginning, that Bitcoin is nearing a death cross. The 50 is crossing below the 200. And they're like, does that mean Bitcoin's going to fail? Well, based on what we've talked about today, should you be worried if you're long Bitcoin and the death cross is coming? No, I would not let that worry me one little bit. The death cross on long trending stuff that loves the trend long, like the stock market or Bitcoin, as it's shown to be so far, a death cross would mean absolutely zero to me if I was a long trader in Bitcoin. All right, so what are some takeaways? If stuff works on the long side, like the golden cross, then don't force it on something else. Trade it with stuff that has long side bias. Now, Forex, totally different thing. Forex does not have a long side bias. So that would be a totally different investigation. And if you're interested in me sharing some of my work on that, I'd be happy to. I thought stocks would be more interesting because the long side and the short side are clearly different, and this might make more sense. Keep in mind that you need different things for different items. Have a short side strategy and have a long side strategy. Be a trend follower to the long side, maybe use one methodology. Trend follower to the short side, use a different. Got it? And as always, I'm trying to give you research. I'm trying to shortcut you. I'm trying to save you time, but test everything first. Don't take my word for it. I try to give you the best, most honest data I possibly can. I want you to come here and know it's a place where I'm not going to lie to you, but test everything first. However, if you don't want to test, then again, I'm trying to give you trustworthy information. So find someone who can test for you that you trust. And then you don't have to test at all. You can just stand on the shoulders of people who do the work for you. Trust, but verify as always. All right, that's all for this week. There's going to be some changes to my website. I've been saying that for a while, but this time I mean it. I'm going to meet with my expert, I think, hopefully next week. So there might be some changes. But for now, robots are at Kajabi Next. And you can always join the newsletter by going to scottwelsh.me, get to the homepage, and just click put me on the list. There's the contact information, everybody. It was fun as always. Let me know if the quality was okay, better, worse, the new computer, new everything. And I will be back again to talk to you more next week. Bye for now.